James just did a really detailed update on Tesla stock. I was asked on my subscriber space that I accidentally made public what my opinion was on FSD. I will summarize. When I started investing in Tesla stock in fall 2019, FSD was not included in my Tesla stock bull thesis. In fact, it has never been included. I invested for the EV and energy businesses, but that doesn't mean I haven't kept a close eye on FSD's development and progress, because obviously the upside is huge. Tesla in 2024 and Tesla in 2019 are different companies, mostly because the strategic direction and focus has changed. The stretch goal used to be 20 million EVs in 2030. Now the stretch goal is robots and robotaxis. I believe as a conservative investor that the probability of Tesla achieving their objectives in this new reality is much, much lower than what I believed in 2019 when their goal was to get to 20 million EVs. Not impossible, James says, just lower. Therefore, risk is higher. I do think, however, that it makes sense that Elon has steered the company's R&D towards AI because the investment required is relatively small and the potential upside is almost infinity. So it is a lopsided bet that Tesla must make. I don't quite agree with that assessment. Back in 2019, the total potential return was, I think, looking back then and looking at the potential future, if you include FSD and all of these other things, I think the potential return was higher in the long term. But the risk was still there. I think the risk today that Tesla would go bankrupt is zero, pretty much. At this point, it's beyond obvious that in the long term, EVs will take over. And seeing FSD 12, I think, is a bit similar to seeing in 2019 that Tesla is working on its EVs, and clearly it is the future, and that eventually this is going to turn into a massive profit center. Back in 2019, my thinking was that Tesla does not need to get to 20 million deliveries by 2030 for the stock to do incredibly well. And with FSD, while it would be amazing that FSD would be completely solved, but even if it's not fully solved quickly, with FSD 11, it's obvious that it is going to be incredibly useful to anyone that drives a vehicle. We can now see that the car is able to navigate parking lots and actually park itself. And perhaps most importantly for everyday use, it is incredibly smooth. And if it can work smoothly in every place in the world, it will help Tesla sell more Teslas. Now, I personally think that FSD will be solved, but I'm talking about a bad case scenario here, and I generally like to look at the worst case or really bad scenarios first, and as long as it still makes sense for me to own the stock, even in a bad case scenario, then I am going to be an investor. Keep in mind that my second favorite investment when it comes to stocks is S&P 500. So in many ways, I am very conservative because I wouldn't be buying Nvidia or Rivian stock or Microsoft or one of these tech stocks. If I bought any of these other stocks, it would be a tiny, tiny amount in my stock portfolio. James continues, where I run into difficulty as an investor is when I look at my original investment thesis. Tesla is not going to be anywhere near 20 million in 2030. I think that much is now clear to anyone. But more than that, I would be okay with bot and AI being the stretch goal if it meant that the core business was healthy. Energy had a great 2023, and I expect an even better 2024. But the auto business, which makes up the lion's share of Tesla's earnings, is struggling to grow and will probably keep struggling until Tesla launches new vehicles. And let's be honest, 2026 is probably a stretch too. When is Tesla ever early? It only happened with the Model Y, and that's because it's very close to Model 3. Look at the challenges on every single other vehicle Tesla ever produced or refreshed, except the Model 3 that was refreshed in China. That was so smooth. But other than that, yeah, we did have quite a few delays. And despite that, the Model Y and Model 3 became extremely popular vehicles. Despite the issues in the beginning with the Roadster and the Model S and the Model X, that did not stop Tesla from eventually developing an extremely successful Model 3 and Model Y. And so issues that Tesla is facing right now, these issues are not going to stop Tesla from developing FSD. Things sort of went off the rails for me when Elon started treating the vehicle business as a cash cow, not to mention the mismanagement of Tesla's pricing strategy and new vehicle development strategy. I think both of these things are connected. Why are they connected? Because if FSD is around the corner, both of these things are a lot less relevant. But what happens if FSD is not around the corner? The high risk, high reward decision to limit new factories, new vehicle development, and go all in on FSD has so far been a failure, and that's where we are today. Buying or holding Tesla stock today is much riskier than buying in 2019, says James, from my perspective, unless the stock price corrects down hard, like sub $100. I hope this doesn't happen, but that's probably where I would feel better about buying and holding. Right now, I keep following the company closely, and I am always ready to go all in if I see a catalyst or if I see proof that FSD will bear fruit. Not financial advice, do your own due diligence, says James. James didn't answer what his Tesla stock position is right now exactly, but it was 100% earlier. I'm not sure until when exactly. Now, I became a Tesla stock investor in early 2019. James became a Tesla stock investor in late 2019, so he may not remember this at all, and I remember this extremely vividly. In early 2019, mid-2019, there was a moment of time then everyone was so freaked out about Tesla stock. There was this note from Morgan Stanley which said that the stock could go down to $10 per share. Keep in mind, Tesla stock split multiple times. At that time, Tesla stock was trading at $205 per share. I don't even see Gordon Johnson saying that Tesla stock is going down to $10 per share. Even his Tesla stock price target is higher than that. I think saying that holding Tesla stock today is more risky than holding it in 2019. I have to strongly disagree with that. I think you can say that without having full context of Tesla's history. If you're just looking at the last few years, maybe you can make the argument, but no, I strongly disagree. Just because you can make that argument doesn't mean it's right. I think all men experienced this feeling of a woman saying that, oh, you did something is wrong, there's something going on, while in reality, there's nothing going on. Just because she makes an argument that something is going on doesn't mean it's an actual fact. Anyway, here's what Morgan Stanley is saying now. This year's sharp deceleration in demand has led to substantial curtailment of the company's ability to generate free cash flow. By the way, this is from 2019. It almost sounds like they just wrote it, right? And if you read this in 2019 and said, oh, yeah, they're right, sounds good, you missed out on a huge opportunity. Right here is roughly when that Morgan Stanley article was published, and even today the stock is still up 1000%, because, you know, there was an issue with demand back in 2019.